Bro, you've let price stop you out 10 times and run to your take profit, and you keep doing the same thing. Look no further than today's video to be able to stop getting stopped out on stop runs and be able to find the double purge and when price is truly going to run to your draw on liquidity. In today's video, we're going to dive into one of the most powerful liquidity strategies in trading, the double purge theory. This method, once mastered, can significantly enhance your understanding of price movement and give you a real edge inside of the market. But before we jump in, if you're passionate about improving your trading game, make sure to hit that like button and subscribe to the channel. By subscribing, you won't miss any of our future trading strategies and educational content. Don't forget to turn on that notification bell as well. Let's get right into it. A simple introduction to the double purge theory is when the market takes out both sides, removing buy side and sell side participants. This leads to a potential for a significant reversal or a continuation inside of the market. The mechanisms of the double purge include the double purge aiming to remove liquidity by running both sides, like we said, the sell side and the buy side. It creates conditions that allow the market to move freely without resistance. When the correct narrative aligns, it provides a safe environment for setting stop losses, obviously because the stops have been ran and you have a high probability order block to easily align yourself with inside of the market. Once both sides are run, true price delivery, such as order blocks and breakers, can form, indicating a potential reversal or continuation move, like we just talked about. The double purge leads to low resistance, time-based liquidity runs, and potential reversals. There are different formations of the double purge. It includes, you can say, a 3 model or a 1 model, 1 candle purge, a classical market structure shift trap, or an AMD purge. This is how I used to see it. How I used to teach it is an AMD purge. I can annotate the video here with my last double purge video, and it shows how I used to teach it then. Shout out to the MMX trader because he actually did post it before me. I don't want to say obviously, but I myself do all my work and do it based off the chart and what I find. And that AMD purge is simply what worked for me. I taught it how I taught it, and he kind of renovated it in some ways, such as the 1 candle purge and essentially the market structure shift trap, even though that's really kind of the same thing, just on a higher time frame. The double purge is useful for identifying both reversals and continuation patterns. It's more effective as a continuation pattern in the direction of the draw on liquidity. To trade the double purge effectively, you need to identify the higher time frame levels where the purge is likely to occur, then observe lower time frame movements for indication that the purge is in process. A continuation purge is confirmed when liquidity is targeted and taken, and the price then moves decisively towards an opposing level. Identifying key elements like high time frame levels and continuation purges to opposing liquidity ends is very key. For market profiling the double purge, in a bullish setup, the market will run buy-side liquidity, often closing above previous highs before targeting the lows that broke the highs. When the market rejects this low, it indicates a strong bullish continuation. Flip it for a bearish setup, the market runs the sell side liquidity, closing below previous lows before running the highs that broke the lows. Rejecting this high is a signal of a continued bearish momentum. Understanding the market behavior as it breaks and rejects highs or lows, and identifying how the purge leads to market rejection and continuation is very, very key to understanding the double purge, reacting to our key highs and lows and our key time-based liquidity pools. For integrating the power of 3, every session, the Asia session, London, and New York follows the power of 3 concept of accumulation, manipulation, and distribution within their own respective sessions and on the higher time frame as well. Each of these phases can exist within the higher time frame structure, and they're crucial to understanding the double purge setups. Aligning the power of 3 across all time frame helps build a coherent narrative, making it easier to identify and act upon double purge double purge opportunities. We will discuss the relationship between the low time frame power of 3 and the higher time frame power of 3 in the context of the double purge on the charts, and understanding what time-based liquidity needs to be taken, and understanding how it can look like seek and destroy. Alignment of all time frames and models to find clarity and reduce your analysis paralysis. Don't fall asleep quite yet, guys. I hope it's pretty easy to see that we have a accumulation range between this high and this low. We see that this accumulation range starts between the London and the AM period, and it lasts all the way until the next day, around 8:30 into 9:30. We then see a run lower into a run higher. This is our key in understanding where price will then deliver from after this. As we know, price should deliver from a discount, so we fib out our high to low after our double purge, after forming a balanced price range, and we see from our OTE primer video that we come into a discount and reject our discounted price array as well as our BPR down here. We then form our high probability order block on the 15-minute. We also see we have equal highs, relative equal highs here. We have low resistance LR above. And also, as you can see during the Asian session, we come into the 2 a.m. candle open, low, high, and then close into the 6 a.m. And then 6 a.m. never ends up having a wick. 2 a.m. did the damage, so 6 doesn't need to manipulate. A London manipulation into a New York continuation. If you didn't catch this one, price was even lucky and nice enough to give you another balanced price range, breaking the high, coming into a discounted price range, displacing, accumulating. And I see that we're moving downwards, but we're reaccumulating, just trend accumulating lower for low resistance to then push us higher. We see then we come into a PM Judas swing with a 2 p.m. open, low, then high into our 4 close, closing above, and then using those highs broken as breakers to then support price higher. I hope you can see where almost every high probability order block is simply formed after our double purge. We purge the sell side, purge the buy side, come back inside of the range, and then dig higher. We accumulate, purge the sell side, purge the buy side, come back inside of the range, deliver higher. It can also be seen in a couple different ways that we'll get into. Here we have our classic market structure shift, inducing our higher high, higher low, higher high, and then another higher low, which we then break through the high, and then run the sell stops below our old higher low into a key discounted key level that then runs price higher. You can see here on our AMD purge, we accumulate, manipulate low time frame, distribute low time frame, and that low time frame distribution runs us right into our high time frame accumulation, manipulation, distribution. Use the old highs to support price higher, our breakers with displacement after a narrative, and then we continue on higher. And a way to understand the 1 candle purge, we have our daily order block here, which we fail to close through, and we also see a 1-2 candle inside bar accumulation on the daily time frame coming into a Thursday key day of the week. We see that Thursday purges Wednesday's high into the PD array, and we can also anticipate the daily closing below. So it purges the high, and then purges the low and closes through. We then create our order block, right, and then run lower into our internal, accumulate, manipulate, and then distribute higher. It's all higher time frame inside a lower time frame. It can get confusing, but you have to understand, right, why we're mitigating price here to move lower to then move higher. Okay, so you don't have to anticipate price moving higher here. You just have to understand, right, why price is moving lower here. Trading considerations for the double purge come as followed. Identifying time-based liquidity during the double purge is essential. Often higher time frame liquidity will dictate the direction and lower time frames will offer clues about how to execute. The purge is typically followed by a significant price movement, either as a reversal or as an acceleration towards the next liquidity target, providing opportunities for both entries and exits. It's always important to align the purge with a clear narrative and higher time frame liquidity objective. In conclusion, the double purge is essential to understanding and helping traders understand how the market seeks to eliminate both sides' participants before making significant moves. It creates low resistance liquidity environments, making it possible for traders to place trades with a higher level of confidence, provided they are working with the correct market narrative. Let's get into the chart to look at the bread and butter double purge that I look for every day. Okay, so for some higher time frame context, we've turtle souped the internal on the 4 hour with this black line here. We can see that we've accumulated, manipulated, and distributed. And as well, you can see our bearish delivery, but it's into a higher time frame buy model here. Inducement into these highs, right? These highs are not protected as we see us deliver back from inside of the range from our higher time frame PD array. Also into this NWOG, souping the NWOG and delivering a Monday low of week. We can then expect a Wednesday expansion. The only thing is, where will it manipulate to? That's a problem for a lot of people. For 8:30 news, which we have this Thursday, I can accept a soup below this low, but that's not one that I would want to trade. I would want to see how we react to this low, then into this high. Because I can see the buy model here, us breaking this high and accumulating past the high here, sweeping into the internal, reaccumulating, and then sweeping one more time and then delivering higher. I can see it. Okay. But then I need to understand, will it deliver past to this high? Let's see what happens. We see news delivers lower than higher, past the high, and we see we reject the high. We now build up low resistance liquidity, so we're still bullish. There's still, no reason to not keep your eye on the draw on liquidity here. We've just now purged the buy side here. So what can we expect? A purge on a time-based liquidity level. We have low resistance here. We have the London low here into a Tuesday low here. This is our previous turtle souped low that held and was protected. We see our original turtle soup, like we said, on the 4 hour here. And we see our delivery from our reaccumulation. First purge, second purge, and delivery back higher. Into the balanced price range OTE. Boom, one more time. And then even right for a double tap. We've now built up these 3 equal lows, which I could understand if we shot lower, manipulated these lows, and then continued back inside of the range. Now that we've come into 9:30, I could see it as a Judas swing higher. Let's see how we move. We move past the lows and reject afterwards. I teach my students here that you guys can use this candle as the order block. Why? Because it has done the manipulation damage. We have a protected low below and we have swept the previous down close candle, liquidated the low, and closed back with inside the range. Also, we have come past the 10 a.m. open, and on a lower time frame, right, we have equal highs here and a lower time frame buy model. So we could buy in here, but let's get a more confirmed entry. As we see, we break and close past the high, use the high as resistance. So you could even buy in here, or you could wait to see if we need to soup the internal into the 15-minute fair value gap. At this point, right, I would say that it's not needed because price is manipulated hard, so it should reject harder. Accumulate, manipulate, distribute. Classic market structure shift purge, as well as a higher time frame 1 candle purge. And you can see we obviously accumulate, manipulate, and distribute lower time frame, while higher time frame just accumulating inside of the range and manipulating the previous day's low. So the lower time frame distributes into the higher time frame manipulation. We see then, like we said, we leave this 15-minute FEG open because price is closed and it will spool away quicker. We can now anticipate, like we showed here with this curve, our sell side of the curve to be put in and our buy side curve. We showed our breaker entry as well as what we teach with the order block entry that looks a little, just a little weird, and it's perfectly fine. Because if you look at this on the 30-minute, I can guarantee you this rejection block is probably beautiful. Inside of, right, the same type of thing on the 4-hour with the wick liquidating the low and closing back with inside the range. And then we draw to our high, still leaving our fair value gap open here from our delivery and using our high to support us higher, and from our order block entry down here. We formed our sell side of the curve into the buy side of the curve, and we can see our classic double purge market structure shift trap that then delivers us higher with our obvious first purge at the high, and our second purge at the low. Alrighty guys, if you've learned even one thing this video, be sure to comment what you learned, like the video, and subscribe. I hope you guys have a great week, and I'll see you in the next one.